Welcome to Invest. We talk about investing, finance, and professional development. So current time of 8:54 a.m. on the Eastern time on Jan 11. Hope you guys have a good Thursday so far. Good morning to the ones on the East Coast that are listening in, and also good evening for those that are listening internationally. On the overall market right now, with respect to the crypto side, you could see that we are up about 1% on the Ethereum side and 1.94% on the Bitcoin side of the ecosystem. And on the equity side, we are seeing some opposition at the moment. Let's take a look at the sell-off that we're kind of seeing. Not significantly, but definitely down about 0.12% on the pre-market perspective. So we'll dive into the technical front to see what are the macro and the micro drivers that are, kind of translate into the price point that we're seeing, but also we will see how that this chart is going to foreshadow on what momentum going forward. So obviously on the crypto side, we are green. And why are we green with this green candle that we see in front of us on a daily perspective? Is mainly driven by the news that came out from SEC yesterday. And you could see that if you look into the high level on CNBC. I don't know why my ad blocker is coming out. So you can see that on a high level, there are two flavors that we're seeing. One is the CPI report that came out. It seems like it's hotter than usual, 0.3% in December, higher than expectations, push the annual rate to 3.4%. But also with respect to the SEC ETF approval that came out yesterday, obviously that's a macro event-driven event that drive the overall market to go up, obviously convey a positive signal, and with positive signal being backed by further credibility from a financial institution, which translates into the broader market to be buying in, right? But with respect to the sustainability of the price level, we haven't really seen major transition from the corporate side, flowing money into, or the capital into these respective asset class. So mostly on the elevations that we're seeing on the price point is mainly driven by retail investors, right? Which doesn't really convey a sustainable momentum going forward. So we'll dive into where do we see ourselves going. Is this like a logical for level to get in, or what would be the right move? So let's just dive into it, right? With respect to recording time of 8:57 a.m. on the Eastern time, we are at 2640, basically 2650, which is a technical level. And let's take a look at on the risk profile front. You can see that RSI is at all pretty much sky high at 71 right now, and the MACD obviously with that golden cross we have translated into this big spread that we see in front of us. So daily is quite extended, because obviously with the news that came out yesterday, it drove the market to go up. But when you see everybody being super happy, that's when you should technically sell. And on the weekly, you could see that we are also quite sky high at 72.75 out of 70, and we also have been extended for quite some time on the MACD front. And looking at on the weekly, it will give us a better synopsis on where we are right now. So technically, the reason that we are here right now, if I draw the line across the spectrum, is that 2650 is a resistance slash support level, and the level that we need to get up to next would be somewhere around 2850, and then the respective level that you will get blocked is going to be 3050. But based on the momentum that we're seeing right now, you can see that we're already quite sky high. To see this furthering, it will push the limit to the point that the rocket might blow up in the sky. And let's take a look at the monthly. The monthly is trending accordingly. It's definitely showing a reversal, but the reversal is not gonna just like happen all at once, right? It's gonna gradually happen. And based on what we understand so far, because of the fact that daily and weekly are quite extended, we do need to see some corrections weeks out. And with respect to the monthly, it is just doing what it's supposed to be doing, right? Just waiting for the ship to take off, or the plane to take off slowly. And right now with I would say monthly it's all like a yellow or greenish color. weekly is mega red, and then daily is also mega red. So if you mix that together, it's probably more opportune time to be getting in a later time period rather than when the price point comes down a little bit cooler, when you have the post-mortem effects from obviously the macro news that we have been digesting so far, because whatever goes up really really fast come down can just as fast, right? On the Bitcoin side of the equation, you are seeing fairly similar dynamic. Daily is quite extended at the 66 out of 70. We are at the moment right now getting blocked on the RSI front. And with respect to the level that we have elevated to, we try to touch 48,000 not too long ago. You could see that we tried to do that 2 days ago. And seems like with respect to the Bitcoin ETF news, despite it happened, it hasn't really propelled the market to go up as ideal as we wanted to. We were aiming for more of a level of, take a look on the weekly, we'll give you a better picture. Somewhere around 50,000, which is the next level. So right now we are lingering around like the 47,500, 48,000, but the level that we need to get above is going to be 50,500, right? So on a risk profile perspective, weekly is at the 77, which is mega sky high. We have been in the sky for quite some time with this extreme elevation. So this is a pretty, dangerous territory that we're in right now. And then on a monthly, same thing as Ethereum, we are gliding accordingly. So daily, weekly, monthly, we do need to, kind of digest all of this news and wait for the market to cool down before we get in, right? So if you guys have a pretty large exposure, I think it's logical to actually take some off the table, because a short-term correction is definitely very probable. Yesterday, with respect to SEC announcement, that was more of a flip a coin type of situation. So when you see that everybody's really happy, really rosy, and also with the hack news on Twitter, that was just like a little bit interesting, right? It doesn't convey a lot of substantive confidence, in my opinion, right? Despite the it's past per se, but a lot of like infrastructural and also legal aspects of things, but also just like systematic things on across the spectrum, it still takes some time to progress. So I wouldn't be super happy for now. I would kind of weigh off when the technical level is a lot more tolerable for you to get in. On the SPY front, you're at the 475. We're trying to go back to all-time high again, right? So with respect to the monthly, we are at the moderate level of 64. On the weekly, you could see that we are at the 67 as well, also quite extended with a pretty big separation. We are at the 70 mark at the moment, approximating to the 70 mark at the moment. So indicating that we're quite still sky high, right? And then on the daily, we are also reaching to a point of 65 out of 70, but we're about to cross up. So we might see a little bit more elevation. But Q1 typically is more of a bearish month because of the tax season, but also the post mortem effects of the Santa Claus route that we had in Q4. So something to be aware of. Is it advisable to be getting in when we're all-time high? I would say, if we replay the history, right, the market will definitely have to go through a cycle, right? So we're definitely on the upper cycle, which doesn't, it's not ideal to be getting in when it's on the upper cycle. You should always be getting in when it's on the, lower part of the curvature, right? So I think seeing some corrections, as we approach further, and obviously we will digress more as we see the CPI report, how the institutional investors and also the retail investors will be thinking psychologically, and the chart will reflect that post as the market open later today. So hopefully this is helpful. It's like a kind of a high level update. Do let me know if you have any questions, so feel free to subscribe to our Patreon. And also it might be a little bit counterintuitive to some people, but it's important to kind of triangulate qualitatively, quantitatively, but also stitch all the macro news together to identify the right pathway for you to risk mitigate. And it seems like the risk is quite high across the spectrum right now, so it's something to be even more careful of. All right, so appreciate you. Have a good day. I'll check you on the next one. Take care. Bye.